Hello trade pros. In today's video, our junior trader Victorio will be taking you through an in-depth explanation of what market correlations are and how you can use these powerful leading indicators to guide your trading strategy and give you early trade entry and exit timing signals. Let's jump right into it. I'm really excited for this video.
Hello YouTube, it is Victorio again from TRADEPRO Academy, TRADEPRO Academy's junior trader, and we have another video for you guys today. I want to talk to you guys about correlations, how to use them, what they are, and how they can help you trade. Whether it's get in a trade, get out of a trade, or stay in a trade, guys. So let's jump right into it. Right here on the screen we have three main charts. Each one is a correlations chart that represent different things. And we will begin with this one right here, our main chart, and I will tell you guys what you guys see on it and how to use it. So let's open it up right here, and let me tell you guys what each line is. So each line is a 5-minute line chart representing equities and bonds. So first, this orange line that I'm highlighting right here are Russell futures. Then this yellow one down here, again highlighted, are the Dow futures. Further along, we have this green line highlighted right here. These are the S&P futures, followed by the Nasdaq, which is the pink line. They're very closely intertwined right here. And finally, we have our bonds, which is this brown line right here. So typically, equities move in a one-to-one correlation with each other. Maybe not an exactly one-to-one, but closer to the one-to-one than bonds would. Maybe between 0.7 to 0.8 to 1. Of a positive correlation with one another, while bonds are typically the inverse of equities. So they would move in a directly or almost directly negative fashion to equities. As you can see here, all equities are pointed upwards in the top right of my screen, while bonds are just plummeting down. This is a pretty typical movement of how equities and bonds react together, but on occasion they will move in a positive correlation. This is typically seen on news events, very news-driven events, very volatile days. Now, what do all these graphs mean? How would we use them in trading? So, typically we have a leader of sorts in the equities market, which on occasion could be the Russell, the Dow, or usually the Nasdaq. S&P usually falls behind. It doesn't really lead the markets that much. It's more of a follower, especially a follower of Nasdaq. But in mornings, you will see a strong move by either Russell, Dow, or Nasdaq in a certain way, and usually others will follow. As you can see right here on the top right-hand screen, Russell's the highest one here. It's just moving the way up. Dow is a little weaker, but it's still climbing up with the other equities. So looking at this chart, you might think maybe Dow might be a better buy. We can use these correlations to see how the charts are effective. As you guys can see right now, there is a turning point right here in the correlations. They kind of look like they're topping out a little. You see bonds are starting to turn a little. We can use this to qualify maybe a stagnation point of a trend, but what we want to see is a drop off like this while bonds reverse and go higher to solidify our position. As you can see right now, this is a chart of Nasdaq in a live action stream. Right now it's very bullish, it's going up, but watch correlations, they're looking to turn to the downside. You see bonds are sharply rotating up. This could be a point of capitulation to the upside for the Nasdaq. For example, let's say that Nasdaq just turns and looks like this while the S&P is still at highs but slowly turning. Maybe a short position could be had at the top for the S&P 500 to catch down with the other stronger moving markets. As you guys saw right there, you saw how Nasdaq turned its correlations. They started turning lower, bonds started to go higher, and we had a little stall at the top here. Little sell-off happened, and if correlations continue to the downside, we can see some more selling down into these areas for Nasdaq. But guys, I should warn you that these correlations should not be your only indicator that you look at. Again, look at how volume plays out at the bottom here, how price action moves around levels, and of course the footprint chart, which is right here. So back to our correlations. So next up, I want to talk to you guys about this chart right here and what it is, how it's constructed. Then we'll move on to this lower chart right here where you see the orange and yellow and silver lines. And after that, I will talk to you about how to use each of them to qualify trades, disqualify trades, or how to use them to stay in trades. And now This is our fear versus greed correlations chart. Fear being the safe haven assets, which are all added together to create this cumulative line chart, this red line you see here, while greed is this green line here at the bottom. Greed encompasses all the equities that are added together. We'll go through them. And they typically move against one another, but again, like I said before, bonds and equities do move together sometimes on more volatile days, more news-driven days, and that could be the case for these greed versus fear charts as well. But generally speaking, as you guys can see, when greed is down, fear is usually up. When fear is down, greed is usually up. They do generally tend to move very inverse of each other. Right here is a negative 1-to-1 correlation. And as you guys can see in the top right here, they are moving divergent of each other. And this is the usual typical correlation that they do set. So the fear chart is comprised of the Japanese yen plus bonds plus gold. So these are all safe haven assets. This is where money usually runs to when there is a lot of downturns in the market, when the market is usually down, when equities are down. This is where money is usually set aside around these safe haven assets. And to create a net negative correlation, the greed line is comprised of the equities, as you saw before, which encompass the Nasdaq, S&P 500, the Dow, and Russell, which you saw on the previous chart. So typically when these charts are divergent, they represent a similar indicator to this chart right here, but in a more compact manner, and they represent the picture as a whole instead of looking at each market individually. Again, another example is, look, the correlation started to tick upwards. You see Nasdaq's the leader. There was a little push higher here, an attempt, but you saw correlations kind of start ticking lower after that. Bonds started to tick lower while there was a little support to the upside here and maybe a push higher. Now finally we get to this chart right here, the bottom chart, which has a yellow, orange, and silver line. These lines represent the commodities. So gold is the yellow one, copper the orange one, and silver the gray one, silver one. These represent mainly a more safe haven asset mix. Silver moves more sporadically. It's the most volatile out of the three. Gold is very close behind. They both have a very positive correlation to one another, and then copper is more range bound. It does move a little slower, but again, they do share the same correlation. This chart's typically looked at when one wants to trade commodities, see how the commodities are doing, or in relation to equities as well. Typically, if your commodities are up, equities usually slump lower and vice versa. These correlations aren't the main ones used, but they do solidify some kind of indication of where equities might be headed, or what equities are doing, what fear versus greed is doing, and etc. Now I want to talk to you guys about how we use these correlations in conjunction with trading. So typically, this chart right here is the first one to be looked at. We see what correlations are doing in an individual manner if we're looking to trade a specific asset class. So let's say we want to trade the S&P and the Nasdaq. So Nasdaq usually leads the S&P either up or down, while bonds do the complete opposite, which is the general trend we like to see and the one we follow. So as you guys can see, Nasdaq is on a tear right now. It's going higher while S&P right here is trying to follow behind. It can catch some support around this area here. Maybe there are some buy imbalances on the footprint chart down at this area at the 90, down towards the 90 area. Yeah, there are a few buy imbalances there. Alright, so let's look for a qualifying trade using our correlations along with other indicators. So right now, as you guys can see, NAS is kind of turning lower. You see correlations are starting to drop off. Both all equities, you see bonds are actually lower too. We're going into the close right now, so it might be a little more volatile. We can look at our fear and greed as well to see a little more general movement out of the fear assets versus the greed assets. So you see greed is turning up while fear is still pretty low. You see equities are starting to tick up. You can maybe find some support on NAS around here. NAS is the leader, it is the strongest, so maybe You might want to look for a play on the ES even to catch up to the Nasdaq. So ES is consolidating around this area here. We would then look at our footprint, see if we can find any imbalances, maybe solidify our level right here. We have 786 buy imbalance, 500 buy imbalance. This could be a solid level to try along if we are bullish on the trade. So as you guys can see, it's a positive uptick on these correlations. Setting a limit for a bullish trade wouldn't be bad. If correlations continue to tick upward, we'd stay into our bullish trade right now. We'd see how it plays out. But again, if correlations start slumping down, if equities start slumping down, if bonds continue to rise higher, then we could be compelled to get out of this trade before it starts turning against us. But as you guys can see, correlations are very strong right now. Bonds are still on lows, but they are ticking higher. As long as they don't consolidate and catch up with equities, we're in a good positive long trade right now. As you can see, Russell's kind of slowing down a little, but that's okay because the S&P and the Nasdaq are both fighting higher. Right now, Nasdaq has some resistance at these levels right here. It could capitulate a little, but overall we found a good level even on the S&Ps, and our correlations helped us get into the trade. If they dropped off a cliff like this, it would help us maybe disqualify the trade. Again, we would look at volume and other indicators such as the footprint to see how things are moving to get a more solidified bias on this trade. Remember guys, you don't really want to just look at one single indicator, so the correlations do help in conjunction with other indicators to find the best trade opportunity. So you guys see, even though that bonds are taking a little higher, they are still on lows. You can see the fear indicator is dropping off. It's kind of stagnant. It doesn't look like it wants to climb all the way back up to the greed indicator. The greed indicator is turning up and it's going higher. We can also look at our commodities indicator to see how gold is reacting to all this. Again, you want to see gold kind of dropping off if you are bullish on a trade. You can see gold is not climbing, but it's not really dropping off. It's kind of staying in the middle here, which is good. It doesn't move that sporadically, so that's understandable. It is on a little low tick here. It's dropping off from this area, while in the background here you could see equities are still on the uptrend. They're ticking up. Nas finding some resistance up here. If this continues, we will stay in the bullish trade. We want to ride this a little higher, go up a little. Again, it's 3 p.m. right now. Coming into the close, things might get a little more volatile, but let's see if we can qualify a live trade on the S&P or Nasdaq for you guys. So let's use these main two correlations since we're trading equities. We don't really need to focus that much on the commodities correlation. So right now, as you guys can see, there's a downtick on equities overall. On the ladder, we see more inventory to downside on NAS. We see a resistance overhead here. There are some buy imbalances up here, a lot of delta here, some buy imbalances here. We have sell imbalances here. You see greed assets are turning down. Fear is kind of downward, but not really doing much. You see right here, correlation starting to tick down. Bonds are going higher. So let's see our ladder right here. We see there are a lot of sell imbalances here. The deltas here. This could be a solid resistance level to the top if we're looking for a short idea. Here we have our DOM for the S&P 500. There's a lot of inventory at the 26.99 level. Again, it follows the Nasdaq generally. Right here, let me pull this up for you guys. There are a lot of sell imbalances up here. Maybe try short on the S&Ps. Let's open this a little so you guys can see that there's a lot of delta right here accumulating, which is resistance to the upside. If we want to look for a short, we could sell it into these buy imbalances right here coming into this resistance overhead. So let's look for a trade, guys. You see how it's starting to slump lower. Look for a short around this level right where the sell imbalances are, maybe a little lower even. Move this down. There are some sell imbalances forming here. Let's see if we can get this move. Correlations are starting to tick down. You see that drop off came in. The buyers couldn't really take over. You see the volume's kind of increasing to the downside. So let's get a little more aggressive here. We can pull it down all the way here to these sell imbalances. As you can see, they are ticking down here. You see that drop. Bonds are starting to stagnate a little. But again, you see correlations, they're dropping off right here. Let me pull this up for you guys. And then there you go, taken out on that trade. You see how that worked out? So you guys see how we played that trade out. We kind of saw what correlation we're doing. We saw a general trend. Bonds were starting to tick up while the equities were dropping down. Again, bonds were at lows. We saw them kind of spike up a bit. We saw correlations turn down. We saw this as a little bias move down. But then we went in and we qualified our trade using our other indicators. We saw the levels here form, we saw our footprint, we saw a lot of sell imbalances here. We looked at the fear and greed, saw what the fear and greed was doing. We also looked at other markets, the S&P, saw the sell imbalance, saw the S&P, and saw how the S&P was moving. So we took our shot short. As you saw here, the level couldn't break above these resistance points here. We saw the sell imbalances come in. We tried our shot short, we went down, and it took us out on a 4.5 tick reward for very minimal risk because it started moving in a direction right away. You saw how that worked, guys. There was a lot of delta here, a lot of resistance to the upside, and correlations helped us a lot. They continued to go down while we were in the trade. Bonds started to tick up while we were in the trade, so we didn't disqualify. But now look, guys, correlations are starting to tick up, bonds are just dropping off a cliff, greed is starting to ramp up, fear is dropping off. Maybe this could be a support level down here, guys. We'd have to go again into our footprint. There are some supports here, but I don't see many buy imbalances. This could be a little fake and then could drop off even more, but again, don't rely on one indicator, guys. Look at your ladder as well. This is very, very important. See where all the inventory is at, the majority of inventory, and use all those indicators together to find the next best trade. One more thing, guys, you see how correlation started to tick lower. This was a little fake to the upside. You saw more sell imbalances come in and price just dropped off. The inventory was to the downside on the ladder and just keeps going. So guys, I hope you enjoyed that video on correlations, what they do, what they are, how to use them to get in and out of trades. And this was Victoria from TradePro Academy. I hope you guys enjoyed the video. Please like, comment, subscribe, and comment down below if you want to see more videos like this to get a little insider on how the professionals trade at TradePro Academy.
Alright, and there you have it. I hope you've enjoyed today's session, and now you can implement correlations to your trading strategy and experience the powerful difference it will make. If you have any questions or comments, please leave them below. I would love it if you could share and subscribe to this channel. We got a lot of awesome stuff coming your way, and I look forward to sharing it with our entire TradePro family on our YouTube channel. Thank you for watching, take care, and have a great day. Goodbye.